Morning, David, thank you. It's always challenging to be compared with Jack Dorsey at 9 o'clock in the morning. But here we are. My name is Jacob de Geer. I'm one of the co-founders of iZettle, a mobile payments company that effectively allows you to accept credit cards with just your cell phone or tablet and one of these devices. Benefit with this is that you can plug in your chip card and not only use your mag stripe. So what I want to be talking about today is why is this industry interesting? Mobile payments, why is it so exciting right now? And to me, mobile payments is obviously card-based, so I'll be a bit narrow in terms of mobile payments for now. I want to talk to you a bit about the challenges that we've seen over the last 3 years. As you see, the presentation that I'm about to give you is called Dancing with Elephants for a reason. And also I want to try to tell you a bit about where this industry is going. But let's start off with cash. And just kill off one of the rumors. Cash is not dead. Cash is no longer king, that's for sure, but cash is not dead. But, and I think this is important, 70% of consumers in the UK prefer to pay with cards. 70%. In a recent study that iZettle conducted together with Banco Santander, we actually found out that roughly 40% of all customers coming into a store actually left that store if they did not accept cards. So with that kind of information and knowledge, since most of the shopkeepers obviously will notice that their customers are leaving, it's pretty fascinating to see that across Europe, still roughly 20 million companies in Europe alone don't accept cards. 20 million companies. That's a pretty spectacular potential in this industry. It's an old industry. Credit cards have been around for ages, and still 20 million companies in Europe do not accept them. And what's significant for these companies is that they're typically SMEs or micro merchants / sole traders or whatever you like to call them. I mean, they are small. These companies are small in terms of turnover, in terms of number of employees. Typically, they are between 1 to 3 employees. But accumulated, they account for roughly 20 to 30% of the GDP in any given European market that you look at. If you look at Mexico, where we just launched together with Banco Santander, I think roughly 55% of the GDP is generated by SMEs. 99.8% in Mexico of all companies are SMEs. So these companies are significant for this industry. There is a reason, obviously, why they're not taking payments or why they haven't taken card payments until today. And there is a reason for them to start doing it now. And I think we can help them tremendously. And the industry is about to start helping these smaller companies to get away from the pain with card payments and having a solution that's not hurting their business. This in combination, this number in combination with what's been going on for the last couple of years in terms of growth of smartphones and tablets is pretty spectacular. No one saw the iPhone coming, and eventually when the tablet came to market, it effectively left the siblings in the dust. This is a vital piece of the infrastructure that's changing the card payments industry. Because effectively, we're taking away the focus from the traditional hardware, the stupid hardware, if you like, and leveraging from the installed base of tablets and smartphones is a fantastic driver in this industry. What's also interesting with this is that with the tremendous increase of tablets and smartphones, the focus is now on software rather than hardware, which is a bit challenging for some of the incumbents. I don't know if you saw the recent plunge in Verifone's share price, but I think the effect that this has on the industry is significant for most incumbents. I started in this industry back in 2010. And the reason why I got into this, coming from a marketing company called TradeDoubler that David was kind enough to mention, was because my wife came home one evening. She was extremely frustrated, not because of me for once, which was a good thing, but she was frustrated because she's one of those 20 million sole traders out there, or smaller companies. And she had been attending a trade fair in Stockholm. And she realized that she missed out roughly 50% of all the sales opportunities during that trade fair because people didn't carry cash. And she came on and said, why doesn't anyone just come up with a solution so I could just start accepting card payments with my cell phone or whatever? Well, I said, I don't know anything about this industry. Why don't you just go to your bank and ask them to sell you one of their card terminals? Then she started explaining to me the complexity in the card payments industry. I have to pay fixed fees for getting started. I have to pay monthly fees. I have to sign up for 24 months to become a customer. I have to go to the bank office. I have to meet with a bank person. I have to sign a physical contract. And then on top of that, I have transaction fees. It doesn't make sense for me. I'll never make that equation work for my business. So I thought to myself, I mean, looking at what's happened in the US, because Square had just launched in the US in late 2009. I mean, they had launched a small piece of plastic together with an app talking to a backend. I thought to myself, how hard could this possibly be? Well, it turned out to be the famous last words. I mean, what you see here is just the acronyms and three-letter abbreviations for different security words in this industry. It's probably the same guy that invented all the names for IKEA who came up with these. But this industry was by far the most complex industry I've ever sort of looked at. It was complex from a regulatory aspect. In Europe, compared to the US, you have to be controlled by the FSA, meaning that you have to live by the same rules as any bank, dealing with know your customer processes, anti-money laundering processes, etc. You had to deal with the rules of the card schemes, since Europe is an EMV or chip card market compared to the US, where you only have the mic stripe. It becomes a bit more complex, and all these three-letter acronyms is just a small part of that complexity. And when we started back in 2010, no one had done what we wanted to do before. We wanted to move like 99% of the logic and security that normally resided in the physical hardware, move that up to the cloud and certify the cloud and then this piece of hardware, making this payments part a lot cheaper, probably 10, 15 times cheaper compared to the traditional POS, so we could give it away for free to still be able to address these micro merchants. It took us a while, roughly 1.5 or 2 years, until we solved most issues. And then we launched and saw a fantastic effect in the Nordics. We went on further, we expanded to the UK, to Germany, to Spain, and now most recently to Mexico. And the interesting thing is that we see the same kind of problem, or potential, if you like, in every market where we enter. Germany being slightly different compared to other markets, since they're still very much in love with cash. So this is how it used to be. Again, pretty ugly to start with, but also complex in terms of getting the contract, going to your bank in person, signing up for an account, being tied up for months. We wanted to change it, make it simple. Everything is supposed to be simple when you accept payments. Everything is pretty simple, for example, with Stripe, taking payments online, but offline it was pretty complex. And again, we moved 99% of the logic and security to the cloud, making it really possible for us to facilitate and simplify all the processes that comes with payments. And that's everything from onboarding. With iZettle, you can become a customer in less than 5 minutes, and we're still complying with the rules and regulations from the FSA. You don't have to go to your bank. You can start taking your first card payment within 10, 15 minutes. The benefit of having everything in the cloud is obviously that we can work a lot with data. It's pretty granular, pretty basic these days, but big data is going to change this industry dramatically. So we're moving away from stupid hardware. We're moving away from the transaction per se. Again, coming back to online. This is how easy it is to set up your online store today. You go to Ticktail, for example, you sign up, you're ready to take your first online payments in a couple of minutes. Eventually, you plug into Stripe or to Analytics, and you get all the data that you need. You get the payments that you need. It doesn't take a lot of time. It's extremely simple. However, in the offline world, where 95% of all commerce still takes place, all these things are currently only reserved for the bigger companies. For SMEs, there is nothing. For micro merchants, there is nothing. We're changing that. We're giving these offline merchants access to any data that you'd find in your online store, bringing online closer to offline, giving them the same possibilities. You get your traditional sales data, but also more importantly, and I think this is an interesting metric, recurring customers. How many of your customers are coming back on a regular basis? Imagine what you could do with that data. Start to communicate with these customers. Send them loyalty offers that they can pass along to a friend. How can we help you grow your offline business? That's what iZettle is all about. And looking a bit into the future. I mean, what's happening? What's happening right now? Everyone is talking about, or a lot of people at least, are talking about mobile payments. Everyone is trying to become the next Square or iZettle or whatever company we're not PayPal, obviously. I'm kidding, John. But everyone wants to be in mobile payments. And the problem is that most people or most companies tend to focus only on the things that you see, the hardware and the transaction. But what's happening right now is that those two key components are being commoditized. In a year, there will be 50 different hardware players in the market, giving away hardware for free, whether it's chip and pin or whatever it is. Transactions are going the same direction as online transactions with significant margin squeeze eventually. So where will the business be in offline payments? And what should incumbents do to remain relevant? We see a lot of banks, we see a lot of telcos who want to get into this industry. What they forget is that the industry is not about hardware, it's not about the transaction. It's everything that has to do with becoming a customer and updating and bringing sort of software benefits to the end merchant in the end. And traditionally, like we heard before, incumbents are not the fastest of innovators. So the only thing that I can say from my perspective is that if you're a traditional company, big company, that do not have entrepreneurship or innovation in your sort of DNA, you better team up with some of the innovative companies that are out there, because there are many of them. And they're looking for partners. And what the banks already have that we don't is a fantastic infrastructure with cards. And as you know, most of you know, I would say that what the banks will make their money from is the fact that we are expanding and leveraging the installed base of cards, the amount coming from issuing and transaction fees going that direction. They don't have to be innovators in this space. They could just sit down and relax and enjoy the ride. Because we're expanding the market dramatically. So if I am to give you one piece of advice, I think I would go heavily into buying Visa and MasterCard shares. They have a fantastic infrastructure that's a global infrastructure. What we, PayPal, Square, and others are bringing to the market is just a way of expanding and leveraging that infrastructure. And you will see the effect of that pretty soon, I'm sure. If you are a traditional hardware company, only producing hardware for payments hardware, you better start thinking on how to remain relevant in the future. Because hardware, as such, is a dying breed, and software will become everything in this industry for the years to come. Thank you very much.
So Jacob, you mentioned data. You know where transactions are taking place in real time in physical places because people are using their mobiles. What is the potential of all this data that you're collecting? How can you use it?
That's a good question. I mean, if we look from a merchant's perspective, I think we can, like I said, we can help them significantly, grow their business in the sense that we can, in a very efficient way, look at what transaction patterns look like, not only for your business and comparing it to weather forecasts and other things and see how that, what kind of effect that has to your business, but also comparing your data, if you run a cafe, comparing that data to your peers. How should you be bundling your products? What should you be selling if there's a cold winter day in Stockholm or a sunny day in London? I mean, all those things we can do. We haven't started doing it right now, but that's effectively where we're going, I think.
So do you see yourself as a hardware business or a software business or a data business?
No, that's good. Also a good question. I think we're definitely a software business, but also a data business. I wouldn't say that we have really started digging into our data just yet. We need the fundamental infrastructure in place first.
Last question. What's harder, getting the physical product right or dealing with regulators?
Dealing with regulators any day of the week, I would say. I mean, it's different challenges, but with regulators, you are dependent on someone else. With hardware, you can do it yourself, and then you can make sure that it becomes, the way you want it.
Thank you very much, Jacob.
Thank you.